Now, there are a lot of indicators that suggest where a certain market might be going, but in this video, I'm going to review the 6 indicators. Now, these 6 indicators are extremely accurate, and they seem to point to one simple indicator, and that is a reversal of the cryptocurrency market. There is a certain risk-reward ratio that right now seems like one of the best times to jump into cryptocurrency space if you're not here already. So in this video, I'm going to review what some of these factors are, who is actually digging up all of this analytics, and what kind of timeframes we could be looking at for the cryptocurrency space to actually reverse course and go on another bull run. And Gary Gensler, who is our favorite, I'm just kidding, not favorite, SEC chairman, just put out a video on his thoughts on how he thinks exchanges should be regulated. I have a new video that just published that I want to get your thoughts on because I have plenty of my own. Because there are now plenty of people inside of Congress and outside that think Gary Gensler is overstepping his bounds. Hey everyone, my name is Randy. Welcome back to the Late Night Grind. Right now on this channel, we are covering cryptocurrency news, investment markets, and personal finance. So if any or all these topics interest you, make sure you go ahead and hit that subscribe button, join the Late Night Grind community, and if you do a couple things, I'd appreciate it. Smash the thumbs up button, watch this video all the way to the end, and also don't forget to hit that bell notification icon so that YouTube will send you a notification when I release a new video. If you do all those things, it really helps out our YouTube channel, so if you do that, I greatly appreciate it. All right, guys, let's jump into it. So let's first jump into some of these indicators that Raoul Pal, who is a former executive of Goldman Sachs, has now been pointing to and doing some analytics digging of his own that is pointing to what he says is the coming reversal and the ultimate risk-reward bet compared to any market that's really ever existed. And so right now he is pointing to a risk-reward ratio of approximately a downside of 30% to an upside of more than 10x over the next coming years. And it's about to start soon. Number 1 is the M2 money supply. And when you look at the M2 money supply and correlate it with the total cryptocurrency market cap, the cycles match exactly. Now, some of that has to do with the halving cycle and the creation of supply and demand issues specifically for Bitcoin. But what this points to is when the M2 money supply actually falls, it's because globally there is liquidity being pulled out of the market. So of course something like cryptocurrency, which is a longer term asset in his view, is going to suffer, and that's exactly what happened. In fact, the M2 money supply has been dramatically pulled back and scaled back in the last 8 months, and coincidentally that's exactly what happened to the cryptocurrency market cap and the price of Bitcoin, is it's gone straight south for about the past 8 months. The other thing to keep an eye out for is inflation. Inflation also seems to hurt the cryptocurrency world because when inflation rises, and now we're looking at interest rate rises, it typically hurts the longer term assets, which of course the cryptocurrency world is now falling into. Number 2, looking at what he calls the growth collapse. So what we're going to be looking out for right now is that as inflation starts to fall, at least in theory, you're going to see a growth collapse globally. Now, he points out that when growth collapse actually happens, that actually brings down yields from the bond markets. And so as yields and the growth actually collapse essentially at the same time, which is basically what's been happening for the past several months and probably what will continue into the next several months, that's what's going to allow the longer term asset space to start outperforming. And what Raoul Pal pointed out is that cryptocurrencies are considered a longer term asset, and because it's more technologically forward, typically front runs that market. Number 3, we're going to be looking at the money supply bottoming out. Now, he was looking specifically at the ISM, which is a 9-month forward indicator. And the chart that he showed indicates that it looks like that M2 money supply is, of course, bottoming out now in 2022, and it looks like it'll be reversing course from 2022 and into 2023, which according to his last chart pointing at the money supply, when liquidity returns globally, as central banks will do what they do and start pumping liquidity into the markets, you're going to see things reverse over the next 6 to 12 months. And number 4, he was looking at some charts. This one, the log regression chart. Now, this one is a favorite chart of Benjamin Cowen, who I watch, who is a market cycle analyst. And this chart specifically talked about how Bitcoin right now is 2 standard deviations away from the average, which is one of the lowest that it's ever been. And at the same time, one of the best indicators of what the Bitcoin price could be doing is looking at the 5-year EMA, the exponential moving average. Now, this is one of those lines that we've been looking at together on this channel for several months now because Bitcoin recently crossed below it and then crossed above it recently with what this essentially is a relief rally. So is it going to stay above it or is it going to dip back below it? Well, according to Raoul Pol, it doesn't really matter because in the near term, in the coming months, it will go back above it and it will go up to, and it will go to that next leg up. Because he also pointed out to number 5, and that is the RSI. Right now, both Bitcoin and Ethereum, their RSIs are at the lowest level they have ever been at. They have been oversold more dramatically than at any other time in Bitcoin's existence. So right now we're looking at a correction phase for Bitcoin and the rest of the cryptocurrency markets. And in fact, he says this correction market's been in play for about 7-8 months now. He also points to the fact that the fear and greed index hit a low of 6 several weeks ago when people say, well, Bitcoin could actually go much lower. Well, according to the fear and greed index, it might not go much lower, but then again, there's certain charts that do point to the fact that Bitcoin could absolutely go even a little bit lower. And I don't put a lot of stock personally into the fear and greed index. The charts speak a lot louder than that does. And that brings me to my 6th point to look out for that Raoul Pol indicates is essentially a bottom signal, and that is what the headlines say, what the rest of the mainstream newsmakers are saying when they put out headlines like, all crypto is a scam. They're highlighting all the bankruptcies. They're highlighting all the Ponzi schemes that are coming out, all the rug pulls, basically all the FUD, the fear, uncertainty, and doubt that starts getting pumped into the news cycle and, of course, into the homes of everybody in the world in order to try and push and suppress that market even lower. Right now is what we're experiencing with that. That could happen, and that could continue to happen for the next couple of months, in my personal view. But we're also going to start to see some of the things rise from the ashes in terms of headlines, in terms of like the video I made the other day, where literally hundreds of millions of dollars per week is being pumped into blockchain projects from venture capital companies. But the one thing he said from other market cycles that this one has not done is the fact that network activity remains extremely high relative to the price or the market cap of the cryptocurrency world. So in other bear markets, when the price collapsed, network activity really dramatically fell off, and the only people remaining were the hardcore crypto fans or the builders. Well, this market cycle is different because network activity remains extremely high, regardless of the price. And to me, this points out that the use cases of the different cryptocurrencies are actually starting to take foothold globally. So people are no longer only worried about the price of something, they're actually utilizing a cryptocurrency for things other than simply a virtual money. And this is what makes regulation of the cryptocurrency world so difficult. Now, I wouldn't want to be Gary Gensler for a lot of different reasons, but especially for this one. However, Gary Gensler, as head of the SEC, has been doing a lot of things that a lot of people are calling overreach, overstepping bounds, in fact, doing things illegally in an attempted power grab to regulate the cryptocurrency industry. So right now, I'm going to show you a video about what Gary Gensler thinks all these exchanges should do and come in and talk to the SEC. Now, before I play this video, I do want to warn you, to some viewers, this may be disturbing.
What are crypto platforms and what makes them similar or different to other exchanges you might know? When you trade on a stock market, you have certain protections. That's because way back in the 20s, the 1920s, the securities markets were rife with fraud, manipulation on the exchanges. And over the generations, the US capital markets have become the gold standard because investors have faith in them. They're protected against fraud, manipulation, front running, and the like. They're not perfect, but they've stood the test of time. What does that have to do with crypto trading and lending platforms? Well, these platforms, the crypto platforms, like stock markets, bring together buyers and sellers. Crypto platforms have millions, sometimes tens of millions of retail customers directly buying and selling on the platform without going through a broker. With so many retail customers trading on crypto platforms, we should make sure that those platforms offer similar protections. So I've asked our staff to work directly with the platforms to get them registered and regulated to ensure that those crypto tokens come in as well and register where appropriate as securities. What's more, you are literally handing over the keys to your car, or crypto. Just imagine this. Imagine handing over all of your stock to the New York Stock Exchange. That would never fly. Thus, I've asked staff how to work with platforms to best ensure your assets are protected. And unlike traditional security exchanges, crypto trading platforms also may act as market makers. It means that when you sell your tokens, one of the platforms may actually be buying on the other side. Stock exchanges don't do this. They don't serve as their own market makers because that creates inherent conflicts of interest. Thus, again, I've asked staff to consider whether it would be appropriate to segregate out the market-making functions on these crypto platforms. Look, there's no reason to treat the crypto market differently just because a different technology is used. That would be like saying drivers of electric cars don't need seatbelts because they don't use gas. We ought to apply these same protections in the crypto markets. Let's not risk undermining 90 years of securities law. We should be technology neutral when it comes to investor protection.
So there you go. Comment down below what you think Gary Gensler's attempting to do by saying that everybody should just come in and register with the SEC. It's my opinion that he's still claiming that nearly all tokens are securities, and including wanting that power play over things like exchanges. There are so many things at play that are trying to suppress the cryptocurrency industry, especially here in the United States. But I want to know what you guys think. Let me know in the comment section down below, as well as participate in the poll that I just put up on the community tab on my channel. And don't forget, you can always follow me on Twitter. There's a link in the description down below. Once again, thank you so much for watching all the way to the end, for smashing that thumbs up button. And as always, I'll see you guys on the next video.